Hey there everyone, it's Joe from Bullion Now, bullionnow.com.au, selling you the best bullion bars and coins, shipped to you worldwide from Melbourne in Australia. This is your weekly precious metals technical analysis where we take a look at the big four: gold, silver, platinum and palladium. Happy New Year everyone. I hope you had a fantastic Christmas, New Year's break. I'm going to keep this very, very quick as we're towards the end of the day. We've had a massive day with people. It's the first time I've had a chance to make the video. I've probably got about roughly 10 minutes, so let's see if we can do that. Of course, head over to youtube.com/bullion now, hit the big red subscribe button, join the winning team. Nearly 1,800 subscribers. We're slowly creeping up there. We're going to hit 10,000 subscribers this year. That is our goal. And shoot for the moon, and you never know where you'll get to. Hit up our auction. Auction number 49 is open on the silverstackers.com forum. You can reach that via the YouTube channel or via our bullionnow.com.au, and you can click on that link right there and it'll take you to the auction page. So, gold, woohoo! What a massive ride we've been on in the last during the Christmas New Year's period. Now, I'll keep this short and sharp. There's two reasons why I think the price has been going up. I think one is very obvious and one is not so obvious, but if you've been a keen observer of our YouTube channel, you may have already heard the reason why from our esteemed owner, Michael. This video right here, should you buy or sell gold right now, was made 6 days ago. And it was talking about the Christmas New Year's period and what happens, and what Michael has noticed over a decade or longer. He's noticed every year during the Christmas New Year's period, the price either has a decent rise or a decent dip. It can go either way. It doesn't always just go up. So, and what tends to happen during the Christmas New Year's period, it's because the traders, the day traders, etc., they go away for Christmas and they go away for holidays. And what magically happens is a lot more volatility comes into the market. Surprise, surprise. And it goes quite high or it goes quite low. And then when the traders come back on board, and that's usually around about the middle of the month of January, around about from the 13th of January onwards, what happens is it starts to even itself out again. So for example, if it had a big dip, one of those years, if it was a big dip, then it would start to creep back up. And similarly, with a big rise, it would start to creep back down again once the traders get back on board and start doing, the things that traders do. So the first part of this rise, and we've seen this lovely rise breaking out of this descending, this downtrend line right here, and that happened to break out. If we take a look on the daily time frame, this is gold in US dollars. Take a look of when it started to do its real magic move. What do you know? Around about December 23rd is when we started to break out. So when we did break out of that downtrend line right there. And then we had 3 consecutive big days. We had this little bit of a resistance point right here at this previous old resistance point right there. And then bang, it was off to the races once again. And in the last few days, a big spike up all the way up to $1,610 roughly. So I agree with Michael that at least the first part of this, maybe the first 2/3 or even 3/4 of all the way up to here, was because of the traders going away, that Christmas New Year's holiday thing, traders thing. And just this time this year, it had a rise instead of a dip. Now this last part, probably I think in the last 2 to 3 days, maybe from around about here roughly, that's got to do, in my personal opinion, and I think everyone else can figure it out too, that's to do with the Trump-Iran situation. Are we going to World War III? It's World War III! Panic, 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 buy, buy, buy. And so that's what people do. When there's panic on the streets, people buy gold as a hedge against that. And then what tends to happen is the traders notice other people panicking, or they think they're not panicking themselves, but they go, well, everyone else is going to panic. And so they think, oh, gold's going to have a bit of a spike. And then we have seen that spike up. So, and we can see that effect because after it's sort of settled down and we realize that, we're not going to war with Iran. That's not going to happen. And also the missile attack on the US base, which magically all 22 missiles happened to just miss everything. There was no casualties whatsoever. And there is word that there was warning ahead of time that it was going to happen anyway. It was just more of a saving face kind of missile bombing thing, just to save face. And so it's just come back down again. So we've seen that peak and we're now back down. Where we go from here remains to be seen. But look, I'm going to, in the next week and a bit, I'm going to say for the next week until Close of the markets next week, I think we will see a dip in the price, a further dip in the price. I'm not saying all the way down to back down here, but we will see a bit more of a dip. And I've already put in here the points where I think it could dip down to. So let's just talk about moving down. I won't talk about the prices moving higher because I do think we are going to move further down in price in the next week up until the close of the market next week. And I think we will definitely hit at least right here at around about $1,505. $1,515 in US dollar terms. And if we break down through there, I think we could hit anywhere between right here $1,490 and $1,480, and that's based on a couple of reasons. This 1515 is because of this previously held level of resistance. You can see that right there, a few points right there. Makes sense to me. It also comes up to the 18 average of highs right there. Can you see that blue line? It comes smack bang coinciding. So two things, previous resistance and the 18 average of highs right there. And if we continue down from there, I do think anywhere between 1490 to 1480. You can see that mark right there. It's just based on that little previous little resistance level and the 18 average of lows right there. So that's my call. I could be completely wrong, and if we go hog wild and keep going, that's even better for everyone. But in the next week before the close of business next week, close of the market, I think we will have seen lower prices from at least here, and that's where I think I've given you my down targets. Let's talk about silver. I'm really trying to race through this one because I've got to pack up the store and get people's orders out and go to the post office and all that sort of stuff. I am the one-man band here. Well, it's mostly a two-man band, but I'm a one-man band as of right now because Michael is having his very well-earned day off today. And even though I say he's having a day off, he's not really having a day off. He's just working in the other office because he works like an absolute dog. So silver, similar thing. I think we are going to, for the same reasons, traders go away and then also silver follows where gold goes. So we saw that peak, and I think we will move down further. The two levels that I think we could move down to, this one right here at $17.30, so that's a 70-cent move back down. And moving down from there, I think that's probably moving down from there. I'm going to say, yeah, look back down to this level right here. That's the lowest we would hit. You see that orange, the yellow line right there? That's at about $16.80, so $16.80. So anywhere a move from or move down to $17.30 roughly down to that $16.80 mark is my call on that. Let me just pop into the daily. No, that's not what I want. I want, nope, days. Nope, sorry guys, days. There we go, 1 day. Could we bottom out somewhere else a little bit higher up? Quite potentially. I don't really see it unless right here could be the low, maybe. So I'll put it at about $17.70 if you can just see it right there. So let me put that one there as well. Head back to the weekly. So I've got those two marks. So $17.70, but more likely for me that $17.30 mark is where we might go back down to before we start, creeping up higher, because I think we're in a bull market now in general in the precious metals. So that is silver. I won't give my up targets just yet because I am biased again to the downside just for this next week and a bit. Let's look at platinum. Platinum on the weekly, we've had that spike all the way back up, see right there, to that $1,000 mark, and all the way back down. You can see right here on the weekly time frame, back down to nearly the 18 average of highs right there. I am going to stay. What am I going to do? I'm going to make up my mind on the spot here. Let me just pop in this trend line. Maybe that one right there. What are we looking at? If we are moving lower, I'll stay neutral for now. Neutral for now in terms of where we're going in the next week and a bit. But if we move down, the next level we would move down to is just this level right here at around about $915. But look, things seem more rosy for me with platinum. So I'm going to say I am biased to the upside in general for platinum. We could spike down to This is on the daily time frame. We could spike down to maybe $915, but I think we will be steadily moving higher from here. So in the next week or so, this is the week. I'm going to stay neutral. Sorry, guys. Don't want to be that guy. I'm going to be the on the fence guy, just staying neutral. If we do go down further from here, around about 915 would be the lowest. And pushing completely up from here, we'd be looking at that target of 1050. And then if we do break through that, the next target is this one right here, in my personal opinion, of 1090. So that's my down target, and those are my up targets for platinum. But I'm staying neutral as to my biases. And finally, look at it. What did I tell you? What did I tell you? Palladium is going absolute hog wild. Now, the last video I did, this was a couple of weeks ago now because of Christmas break and all that, we had that spike up to the $2,000 mark. I think we had hit it, and I'd made that video after we'd hit it. And then we were around this kind of area here, and I said, watch out for the move back down to a previous old high. And I put in this line in the last video. You can check me on this. Check when I made the prediction, and then check when I put in this line. And I put it in right here of around about 1825 was a previous old high. And in between my last video and this video, what do you know? We've seen a move right back down, smack down to that exact level at around about your 1825 level. And so that was a nice little correction. We came up to the psychological value of 2000, then a nice correction back down to a previous old high right there. And then we've since gone off to the races. And now that'll be the trader effect again, the Christmas break trader effect, probably in Palladium, more so gold and silver, but maybe Palladium as well. And we have broken out of this trend line right here. Check this one out on the weekly time frame. See this trend line, that high, through three highs, and we've broken through that trend line. That's pretty damn bullish. I've been talking about, I said we would land anywhere between the $2,000 to $2,600 mark. We have had that spike down now though to that 1825 level, and now we're heading back up. So it could land for me. We're not that oversold yet. We're not that oversold on Palladium. We have had that spike down, and now we're having another decent run up. So I think we could run all the way up to 2600. But I'm not going to give you a massive call, but I think the largest we would go would be to that $2,600 Fibonacci level right there. But we've got a little bit of a ways to go. I don't think we would necessarily tank from here, because we did come up to that $2,000 psychological value, and we did have a decent retracement. So I think I'm still bullish on Palladium. We could still push high. We might have a little test of, because I've talked about it before. Let's go to the daily. We could have a test of, let's put it on auto, a test of this trend line right here. Just depends when it hits, because a lot of the time when you break a previous trend line and you spike above it, you come back down to visit it. So we could certainly come back down to visit this trend line, just depends where, and then I think we're heading back higher again. So I'm bullish on Palladium, at least for the next week and the next sort of week and couple of weeks, but we'll revisit it next week, of course. And that's it. 13 minutes. That's not too bad. I think that's roughly 13 minutes. I'm going to leave it at that, guys. Like, share, subscribe, of course, if you want to see what's going on with the precious metals, our special sales, our auctions, our insights, our technical analysis videos, of course. That's why you're watching this video today. And of course, head over to bullionnow.com.au, check out our auction, and of course, buy the best bullion bars and coins shipped to you worldwide from Melbourne in Australia. What an excellent ending. That's it from me. Stay safe, and we'll speak to you soon.